What's up, everyone? It's Caddy with Money Vesting. So wholesale inflation, so PPI numbers were supposed to come out at 8:30 a.m. Eastern today. So that's another report that comes out and gives us a little bit more insight into inflation. And boy, did it drop. It dropped like a rock. It was down quite substantially and the biggest drop post-pandemic. And we are now coming down to really, really low levels. And we had a quadruple beat on PPI numbers. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. And this right here is going to be that reports of wholesale inflation posting a biggest drop since start of the pandemic, and PPI shows as price pressures ease. So we came in a negative 0.5% on a month-over-month basis. Year-over-year came in at 2.7%. That's down from 4.6%. And month over month for core, so excluding food and energy, we came in negative 0.1%. And year over year, we came in at 3.4%. With X food, energy, and trade services, we did increase 0.1%. So the main key reason why inflation dropped on a month over month basis, two things: trade and energy. Those were the two main reasons why PPI numbers dropped here on a month-over-month basis. And year-over-year, X food, energy, and trade services were sitting at 3.6% compared to 4.4% same time last month on a year-over-year basis. So in March, 2/3 of the decline in the index for final demand can be attributed to a 1% decrease in prices for final demand goods, and the index for final demand services moved down 0.3%. So you can see the significant move lower in overall wholesale prices. So if wholesale prices are lower, and if CPI prices are not, that really goes to show that margins should expand for a lot of producers, for a lot of wholesalers, because they're still paying lower prices and they are charging higher prices to consumers, right? That's why the CPI is on the end consumer, right? That's the consumer price index. Now, in this case right now, from yesterday's CPI report, we did see core tick higher a little bit, even though energy prices, even though trade services on the more producer price index, the wholesale prices, they are lower. That means that consumers are still being charged a little bit more than what producers are paying for inputs and raw materials. So margins could expand for these producers and these wholesalers. By the way, I posted a new options tutorial for all the members. So if you want to access this, link's going to be down below if you're interested in joining, and of course, getting access to all the binds alerts, options alerts, trade ideas. There's a complete beginner-friendly tutorial on options. If you're just getting started, I posted this about 3 hours ago, so you can access that as well with the link down below. So this right here is the changes in the PPI on a year-over-year basis. You can see that we're coming off of 7.1% all the way down to 3.6%. And this right here is going to be change in final demand for 12 months ago, unadjusted. This is core, by the way. So on the right, you'll notice X food, energy, and trade services. And this right here is the actual headline, which is now coming down to 2.7%, down from 11.7%. Absolutely insane number coming in down to this level for PPI. This is actually pretty good number. You can see smallest annual gains since January of 2021, down in 9 straight months. Producer price index on a year-over-year basis. You can see how accelerated we are with respect to producer price index. On the way up, they were both moving simultaneously. They were both moving up in the same direction at the same time at the same rate. But now we're definitely seeing pretty much a divergence, meaning PPI definitely moving much faster to the downside than CPI, which should also follow in the future. So producers feel it before it trickles down to Main Street. This is jobless claims, which also came out today. Just giving you a quick update. So 239,000 jobless claims reported with respect to the consensus of 233,000. And if you go over to some of the main categories, by the way, the markets are higher. Nasdaq's up almost 1%. We got the S&P 500 up 30 basis points, and the Dow Jones right now is pretty flat. So this very strong inflation print is being celebrated, of course, among tech stocks. If I come down to this report, I want to specifically drill down on energy, which was obviously lower quite a bit on a month-over-month basis. So if you come over to, by the way, demand, both producer price index for both goods and services were lower. So goods were down about 0.1%, actually not point, but 1% from February to March. And then services right here, final demand services, was down 0.3% on a month-over-month basis. So both demand goods and demand services were down on a month-over-month basis. And then you'll notice that main pretty much a significant sell-off happened in final demand energy, which was down 6.4%, 6.6%, 6.2% respectively on a month-over-month basis. And then over here, you'll notice that trade services, trade government purchase goods, and trade services specifically were the ones that were down over 2.4 to 2% on a month-over-month basis as well. This right here, transportation and warehousing. So personal computing, transportation, warehousing, private capital equipment, they were also down 2.6, 2.3, and 2.4%. And so if we consider the actual Fed funds futures right now, 63% probability that we're still going to see a 25 basis point hike from the Federal Reserve in May. So May 3rd is when the next meeting is, and 36%. So markets still very much optimistic that the Federal Reserve is going to indeed raise rates by 25 basis points and bring us up to over 5 to 5.25%. But the markets right now, of course, still relatively flat, especially the S&P and the Dow Jones, and we still do have a very strong resistance to watch at the bear camp for both the Nasdaq and the S&P 500 as we approach these levels. So S&P 500 sitting somewhere between 41 and 4,200 is going to be that resistance level to watch for this index. And of course, the Nasdaq sitting somewhere between 12,000 to as much as 12,300. That's going to be the level to watch for the Nasdaq as we approach this very critical area of resistance for the Nasdaq as well. So hope you guys enjoyed this video and a complete update on the PPI numbers. So from a wholesale perspective, we came in very strong with a very strong beat on all fronts, and of course PPI accelerating to the downside, and we're coming down, and we're actually 2011 we were a little bit higher than where we are right now. So we are now lower than where we were back in 2011 for producer price index, and of course CPI also needs to be a lot lower than where we are trading at the moment. So this, in my opinion, should continue to follow, but at the same time, that doesn't take away the probability of a recession. Just because inflation is improving doesn't mean the recession is not going to happen, right? That can still happen despite inflation coming down, and that's actually going to make inflation go potentially even into deflation if a recession happens, and of course consumer spending significantly slows down and people are not spending as much, which as a result is also going to affect earnings, which could be reflected in the upcoming earnings that are coming up. And not to mention the price to earnings multiple on the S&P 500, the valuation can once again be a little bit more skewed to the upside, making markets seem a little bit more on the overvalued side, which is one of the reasons why I'm very much focused on raising some cash, raising some capital in order to take advantage of the deals that present themselves over the next few months. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. As always, happy investing, and let me know your thoughts down in the comment section below. What do you think and make of these PPI numbers? As always, happy investing, and I'll see you all in the next video.